The Dow Jones down 876 points today. So it re-entered the Dow Jones and the S&P re-entered um, bear market territory. And once again, for anybody that's not familiar with bear market is, that is 20% off of a high for the stocks.
Mm-hmm.
The Nasdaq was already in a bear market.
Yeah.
The Nasdaq was down 530 points today.
Yeah.
So
you want me to run the numbers? So we got the Dow. It was down 17% from its high. The S&P, which is in the bear market, was down 21% from its high, and the Nasdaq is down 33% from its November high. So yeah.
they're all close to 52-week lows.
Yeah.
All right, so that's that. So a general question is what are the thoughts of the market right now? The number one question is people, are concerned, how long will this last? How long will it last, and how far will it go down? Those are the two questions. How long will it last? How far will it go down?
I think the Dow could get down to 29,111. That would be a good buying area. We are in a recession, whether they admit it or not. I know it's scary, but I'm telling you right now, the market is resetting to the levels where it should be. If you are a new investor and your account is getting destroyed, you don't have to sell off everything, but you can either open a new account and start with better entries or average in. But when I was telling you guys 2020 and 2021, I'm not going to yell or stand up. Kudos and congrats to your amazing parents on the anniversary, but to your mom, I won't yell tonight. Right? We are just now operating in the levels in which we should be. So remember in 2020 when I used to say, hey, imagine if we had a player, Jeremy Lin, I love you. But if Jeremy Lin comes out tomorrow and scores 30 points a game, no one's going to pay him $55 million a year to play for the Lakers. That was a blip in the system. Quantitative easing caused a rush up. And I also told you guys, they were allowing people to get money last year to prepare for this upcoming crash. If your account is down, I know it's not fun. You still have to hold everything for 10 years. For my Bitcoin lovers, I told you 20,000 was coming. Hold for 10 years. If you truly believe in Ethereum, hold for 10 years. I need everybody in chat to put hold for 10 years. The only people who are panicking right now are the ones who have not been invested for 5 years or they bought at bad prices. It's going to be okay. But we're just going back to the normal levels of where we should be.
And let me add this too for historical reference. And obviously, nothing is guaranteed, but history is a good way to kind of have a good indication of what will happen in the future. On average, bear markets have taken 13 months from peak to get through, and 27 months to get back to break even on average since World War II. So I say that to say, of course, we were all like, for as soon as we hit the bear market, then the market just snaps back and it's all going to be good again. I don't think that that's going to happen. I think that this bear market could last well into 2023 for a variety of different reasons, but for the number one reason is that inflation is at a 40-year high. So the problem with inflation being at a 41-year high in the market is that it's a recipe for disaster, because you can't pump money into the market. You can't push money into the economy anymore, as they did the last two times. The last two times in 2007 and at the beginning of Corona, as Ian had referenced, quantitative easing, and they pushed so much money into the market, and that kind of, artificially inflated stocks and the economy as a whole. But they don't really have the luxury of doing that right now, because if they did that, then it would just completely spiral the economy, and inflation would just be at like 20%. It would be like a third world country in no time. So they can't do that. And not only can they not put money into the economy at that rapid rate, but they also are going to have to raise interest rates, which they already are raising interest rates. MG, the mortgage guy, have referenced that 30-year fixed mortgages is at 6% on average nationwide right now. So and it'll probably go up a few more times over the next 6 months. So yeah. It's gonna be a long haul. We did do a whole YouTube episode about how to short stocks. So, but in the meantime, you have to pick your stocks that you're interested in, and you have to dollar cost average is always a good strategy for investing. We've talked about that so many different times. And you have to pick a price point that you feel comfortable putting money into it.
Which we
Now,
get for free.
Yeah.
so that's my take on the time frame of it. Now, the next thing, I'll give my 2 cents on how far it can go down. I think we still have room for it to go down further. I think all three indexes, but we'll talk about the S&P and the Nasdaq, because those are the ones that's the most important. The Dow Jones is not really as important as the S&P, because the S&P is more broad range. So we're down 21% in the S&P right now. So that's just barely in
scratching the surface.
bear
We
market.
just touch it.
I think we can definitely get to a 30% decline in the S&P 500, and Nasdaq is at 32%. I think we can definitely see 40% drop. That's only 8% more. I think we can definitely get to 40.
Yeah. Who in here would be elated if a house that you want went on sale for 32 or 40%? Now I have to come back and remind you, even though you may not like delivery. I'm not gonna yell. Shout out to Smoothie King. There will be no pineapple or leather jacket vibes tonight. I'm staying in Zen, pure cotton vibes, right? But if you were buying too high, and it's the truth, a lot of you wanted easy gains and thought because of quantitative easing, trading and investment was going to be easy forever. Great. That was Little League baseball in 2020, right? Now the people and shout out to you, those of you that have been disciplined and didn't jump in every crypto and didn't jump in every stock. Buy the highest qualities companies. And I'll say this too, in 2007 and 2008, there were some companies that fell apart or went out of business. Countrywide was an example. And there was a changing of the guard where like Adobe, Cisco was not as popular, Facebook, and other tech companies, LinkedIn became more popular. We will have a similar changing of the guard. In 2 or 3 years, we're going to see a lot of Web3 companies become dominant forces. I want to be on record right now. Facebook has 5 years before it's over with. Mike, clip that up. Nikki, clip that up. You guys can keep arguing, but those stats. I told you that what was in Vegas, and then Cheryl resigned. For those of you who don't know, Cheryl is probably the 3rd or 4th most important person in corporate America. She left Facebook. For what reason? How many CEOs or top executives in the C-suite have resigned in the last year and a half? We're over the number I said we needed to be to signal that there's a recession. Changing of the guard is coming.
Here's the good news. Let me just say something. Here's the good news, though.
Okay.
Here's the good news. Usually, once again, going back to historical data, stocks fall 36% during bear markets, which is right at my number of, I think the S&P can go to 30 or even a little bit lower, and the Nasdaq can go to probably 40. That would probably average out around 36% for the total market. But during bear markets, it usually goes up 111%. So what you have an opportunity to do, and if you study history, because obviously I was a financial advisor for anybody that didn't know. When I first came in, I came in 2007. So I actually came in during the Great Recession, which was the biggest recession since the Great Depression. Right after that was the stock market was up like 40%. So stocks usually have their biggest increase after their greatest drop. So I say that to say, if you have patience and you have capital, the next year might be painful, but you'll have an opportunity to make monny. You have an opportunity to make money, and historically speaking, probably in a short period of time, you'll have a upswing, depending on what you invest in, obviously. But in the meantime, you're gonna have pain, and that's something that you just have to take into consideration. But definitely, from historical data, this is not the time to just cash out all of your investments. This is not the time to just say investing is not for me. This is the time to further educate yourself, because during these times, historically, the stock market has always rebounded, and it has rebounded its biggest gains after the deepest declines.
Yeah. So that's where I was going with it, because I had a phone call today. I mentioned it to you, and that was a conversation. It was like, how patient can you be, right? We can say it over and over again. The market pays those who are patient, but until you've actually experienced having to be patient, you can't really understand it. And I mentioned this earlier as well. It was like, look, there's peaks and valleys, right? But when you make it to the peak, there's nowhere to climb. And so what do you learn from there? You don't really learn much. It's the valleys that you have to get back to so you can actually learn, is this going to be my new market? Right now we're in a valley. So this journey is going to be a new one for a lot of people. They've never experienced anything like this. What are you going to learn from this is what I really want you to focus on, right? Am I going to now open like a new account and get better entry points? This is a part of the conversation I was having. You know, the young lady I was talking to was invested in a company that she's working at. She's like, I think I want to sell everything. I'm like, are you going to leave the company? No. Then why are you going to sell off the stock? You believe it enough to be employed by them. And so it was like, look, you're going to have to learn patience. And I want to touch on like just two things really quickly, because like today, obviously we saw the Dow fall down 876 points. And so the kind of the why, let's get into the why. So obviously, if you've been following what's going to be happening this week with the Fed Chair Powell coming in, they said that they were going to raise interest rates by 50 basis points. Based on the inflation numbers of last week, it looks like they might do more than that. It might be 75 basis points, which people weren't expecting. Why did they think that? Well, they thought that inflation was tapering, right? They looked at February and March of CPI, April, and they said, all right, well, it might have hit its high. Well, then we looked at the May numbers and it didn't. It actually went higher and it rose to, like we said, the highest point in 40 years or 42 years. And so a lot of people, like, I'll get that DM, like, what does that have to do with inflation and raising interest rates? So I was like, wait, let me just find something that would be as simple as possible to explain this to our audience. And so I was reading the New York Times. Kathy Jones, the chief fixed income strategist from Charles Schwab Center of Financial Research, I think she put it really brilliantly. She said, by raising rates, the Fed is trying to make you slow down your spending. All right, so keep that in mind. They're trying to make you slow down. That happens when the cost of money goes up for a car loan, a mortgage, or something else you want to spend your money on. At some point, you're going to have to pull back. The higher the cost of money reduces your purchasing power, right? What you can buy or what you can afford. And the Fed is effectively making you buy less, right? So when you buy less, inflation slows down. What happens though, if you keep buying less, then you can have an economic downturn. And in economic downturns, people lose their jobs, people lose their homes, which is when happens when you hear that R word, and now we're in a recession, right? We see unemployment rates go higher. And so they got to be very, very careful about how high they're raising, right? If they're saying they're going to raise it 75 basis points this week, and they're saying they're going to have another 75 in July, and they said they're going to be another 75 in September, right? People are not going to be able to afford after a while. And so they got to be very careful. So you hear this word soft landing a lot when you, like, if you watch some of these shows, the soft landing, where's the soft landing? There is no soft landing. And so we got to be very mindful. So one of the key things I was saying when I was having the conversation was like, do you have cash on reserve? Keep it there. If you want to invest and find some good spots, start very small, right? If you believed in a company like Amazon, it's $100. Do you have $100 to spend on a share of Amazon right now? If you don't, think about where you're spending your money, right? Are you going out to eat every week? Are you Uber Eats? Your Uber Eats bill is probably more this week than one share of Amazon. It's probably more than one share of Apple. But if you did that on a compounded interest, or if you did that in a compounded way where you're doing one share a week, by the end of the month, you got 4. Like we just said, these statistics don't lie. We know that the market is going to go up 77% of the time. The market will increase in value. So you just got to pick your spots. The market will pay those who are patient. And so you got to figure in this value right now, who you're going to be, what type of investor you're going to be, and what you're willing to sacrifice to make sure that you have long-term positions. And so when we talk about hold for 5 years, hold for 10 years, it's not a joke. It's not a game. I'm not trying to tell you to be a trader. I'm trying to tell you to be an investor, because that's where the money is.
My graduates from my school being Forbes, bag drop.
Bag drop.
A mic drop, bag drop.
Bag drop.